Really nice day for Palantir and some of the other software stocks out there, which have been, for lack of a better word, really decimated this past year, or at least year to date. And Palantir is not immune to the software route that we're seeing, but the stock is actually holding up quite a bit better than some of the other names out there. I mean, it's still down about 19 or so percent year to date. But if you look at Mizuho, they are actually quite constructive on Palantir, considering that. The price has come down substantively over the last 6 weeks, at least year to date. They're still maintaining a $195 price target, but they moved their rating on the stock from neutral to basically now perform. One of the things about Palantir is that top line sales are still growing quite robustly in terms of sales growth last year. 52% earnings growth estimated for 2026, 76%. And if you look at the margins, they've been really expanding quite nicely with 36% net income margins. So this company is expanding its total top line sales, earnings growth, and margin growth. So all these variables are quite bullish. But the only problem really with Palantir is not necessarily the technology or even the end market demand for their technologies. It was valuation, and this is what Mizuho is really addressing with their call here, because if you look at the earnings multiple for the stock, it's contracted nearly 50% right now, based on adjusted earnings for fiscal year 2026 at $1.32. It's trading at 100 times this year's earnings, but next year at 73 times. Now, these are still quite large earnings multiples, but they are significantly lower than where they were just a couple months back.